This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain, and cryptocurrency space. My guest today is Firestorm. Firestorm is the head of strategy at the Dexalot exchange, which we will chat about today. But first, I need to say welcome to the show, Firestorm.
Thank you very much, Andy. Glad to be here. Thank you very much for having me.
It is a pleasure, Mr. Firestorm. Happy to have you here. Let's do what we do at the beginning of the show. I'll invite you to please introduce yourself. I'd like to hear a little bit about your backstory, what you've been doing in the lead up to coming on board as head of strategy at Dexalot, and probably also be good just to learn a little bit about the origin of Firestorm and what that identity represents.
Sure. That's a loaded question. I guess I'll start with the fun part. Firestorm is a nickname that I don't exactly remember where it came from, but it was a nickname that I used when I was a kid playing StarCraft 1 and StarCraft 2. I'm sure people will figure out my age from this, but I used to play a lot of these games, and my friends over time stopped calling me by my name and they started calling me by my nickname. And since then, I kind of kept it on Twitter, on various places, and it just got stuck, if you will. Funny enough, people who are active in the crypto spaces, typically the Avalanche space, will know me by my nickname rather than my actual name. And, that's where it stayed, basically. Anyways,
nice.
Let me tell you. Let me tell you a little bit about my background.
Sure.
I apologize. There may be my kids may be screaming in the background. I apologize in advance. So I've been in Wall Street most of my career. I'm originally a traditional finance guy, focusing on electronic trading. I worked at a good number of very large banks. Most recently, I worked at JP Morgan. I was part of the FX electronic trading team, focusing on algorithmic execution. Just in case there's anybody in the audience who doesn't know what that is, nowadays there's three ways to trade FX. One way is the old way, the old school way. You pick up the phone, you connect with a salesperson, and then they'll give you a price. What's happening under the covers or behind the scenes is the salespeople are going to put you on hold, go to a trader in the bank, they'll get a price, then they'll communicate it back to you. And if you say yes, that trade is done. Once that trade is done, the traders in the background will actually pick up that risk and they'll trade using algos or some other means to execute. That's the old way of doing it. Nowadays, there is interfaces where people can simply double click and execute a certain amount of risk. It could be a few millions to a few hundreds of millions. And then the last way of executing is what we call algos, where your size is so large that you can't really do a double click trade. You need some time and you need access to a lot of liquidity. So you use software to access multiple exchanges or electronic communication networks, ECNs as we call them in the FX world, and you trade over time based on some parameters. So that was my job for a good number of years. However, in 2016, I was listening to podcasts during my commute, as you would have it, and I eventually came across another podcast with a gentleman named Emin Günsirer, who was talking about multi-sigs and how to make cryptographic wallets and cryptographic accounts secure, which intrigued me, quite honestly. And as you can imagine, that was the top of the rabbit hole, and I fell full force. So I've been in crypto originally as a hobbyist, looking at stuff at night, trying to learn since then. And I've gone full-time basically last year. Right around now, I actually resigned from my job at the bank that I was at, and sort of figured out what I was going to do. And that's how I ended up here. The story about me joining Dexalot is another funny one. So back in October 2020, again, I was at the bank and I pitched the bank an idea where the bank picks up a third generation blockchain, builds a decentralized central limit order book on top, connects the client onboarding infrastructure, the KYC, the AML, the credit facilities in front. And I pitched this to the head of trading for my business at the time. And I was quite excited because I felt like if I could convince them to do it, trading would become significantly more transparent, much more efficient, and it would help everybody overall. But of course, as you can imagine, banks of that size weren't ready by then. And that idea was shut down. Shortly after, Dexalot became a reality. A couple very intelligent gentlemen founded the product, and the product actually launched the next year. And I sort of sent them feedback, very aggressive feedback, if you will. And to my surprise, they were extremely receptive and they responded. They asked me more questions. And that was sort of the beginning of our relationship, which eventually allowed me to join the team as head of strategy. That's kind of the story.
Very nice, Firestorm. Thank you for laying that out. I suppose then it's time that we talked a little bit more about Dexalot.
Sure.
Yeah, love it if you could give us the, I suppose, the high level summary of how you and the team think about Dexalot and its place in the market. So yeah, what is Dexalot?
Absolutely. So in a single sentence, Dexalot is a decentralized central limit order book exchange. So central limit order book is a concept where users are going to place willingness to buy interests, this is what we call bids, and then willingness to sell, this is what we call offers, into a single matching engine, if you will, or a single order book, as we call it. This is by far the dominant form of trading in traditional finance. And as you can imagine, this form of trading sort of, evolved over the course of the last 4 or 5 decades. So TradFi didn't start in this fashion, but eventually it evolved to the point where all of these orders, willingness to buy, willingness to sell, bids and offers, end up in a single central location, marketplace, if you will, to trade, right? Obviously, as high frequency trading businesses proliferated and electronic trading sort of started dominating the market, things became very efficient, and clubs, as for short, became even more crucial and became the dominant form of trading. Now, when crypto first came about, or I shouldn't say crypto, I should say blockchains, the same concept was quite intriguing because in the traditional finance markets, clubs are dark, or rather they're black boxes. These are closed-end software systems where people will enter orders, but you don't necessarily know what's happening in there. You don't have access to the code. Regulators can only regulate via, outside questions and inquiries. And it's sort of a non-open system, right? Blockchain and decentralization obviously creates a whole different angle where, things can become completely transparent. And the relationship between traders and the exchanges can change from custodial to non-custodial. Effectively, tying it back together, Dexalot is intending to take the most capital efficient way to trade and apply it to a blockchain environment currently on Avalanche and specifically an Avalanche subnet, an application-specific subnet, to bring the same look and feel that a traditional central limit order book exchange like NASDAQ or Coinbase would give you, with the added benefit of decentralization, non-custodial relationship where the assets are still yours rather than in the pocket of an exchange, with the added transparency and verifiability. That's the high level what Dexalot is.
Fantastic. And, if you just put that in the context then of how you guys see yourself as fitting in I suppose the global, it's very fragmented global crypto exchange market. There's a number of kind of big centralized players. There are a number of DEXs, decentralized exchanges, scattered across all these different exchanges, more popping different blockchains, more popping up every week or every month. How do you see yourself as kind of competing across that fragmented market space?
Absolutely. Great question. If you don't mind, I'm going to break it into sort of two distinct comparisons.
Please.
Right? So the first one, obviously, is centralized exchanges versus decentralized exchanges. And in the context of this comparison, I'm talking about central limit order books, because centralized AMMs, as far as I know, don't exist. I know there's a couple tries, but it doesn't make sense because it's not capital efficient. So in that context, Dexalot is intending to create an edge for the end users by changing a few things, right? In terms of the user journey, it looks similar. You will deposit your assets somewhere. In the case of a centralized exchange, that somewhere is actually a private company and their own wallets, right? In the case of Dexalot, that's actually a smart contract that you can see, you can verify, and you can trust because you actually know the exact code and you can look at audits, etc. So the first and probably the most important thing that Dexalot is trying to solve, particularly knowing the events of 2022, is the relationship between the person using the exchange, the trader, and the exchange. So that relationship is non-custodial. Your keys, your crypto, or not your keys, not your crypto, as the saying goes, right? The second one is transparency, where, like I said, the code itself is open source. Smart contracts are verifiable, which in turn eliminates the need for trust. And I find this ironic because you can read the code and you don't need to trust as to what it's doing. You can trust the product. I know it's like a funny thing to say, but if anything, 2022 taught us that, look, there is a lot of dynamics, particularly with centralized exchanges, and we don't necessarily know what's happening behind the scenes with our own capital if we leave it up there, right? With Dexalot, you don't need to worry about that because you can, at any given time, verify the balance of your assets and the balance of the entire exchange. The transparency has an added benefit also where, like I mentioned earlier, regulators, I believe, will actually have a much easier time regulating these types of exchanges in the future, primarily because they no longer have to send questions to a bank or an exchange to ask what happened, because they will be able to see it themselves. They'll be able to build the tools. So this is another edge that Dexalot effectively brings. There will be a lot of activity, but all of that activity will be public, and regulators, participants, market makers, anybody looking will be able to see it in the exact same way. So this is sort of the comparison from benefits of Dexalot as a decentralized club versus centralized club. Now, there are a couple of things that are cons, I'm going to say. Dexalot obviously runs on a blockchain, and blockchains inherently have throughput, capacity, finality limitations. And centralized exchanges, by being completely closed-end systems, have been very, very performant up to now, right? This is the reason why Dexalot chose Avalanche as the blockchain to deploy on. And now that Dexalot moved to its own application-specific subnet, the goal is to rival performance of centralized exchanges. As you can imagine, this is much more difficult to do in a decentralized environment than a centralized one. However, the performance numbers using a EVM clone with an application-specific blockchain where you don't get bogged down by other applications seem very promising. There's still a lot to be improved here. There's going to be custom VMs available to people. But so far, we're of the camp that this is very doable, because if you go to Dexalot today, it's very difficult to discern the trading experience between a Dexalot and a centralized exchange. Anyways, this is sort of the comparison, and the edges that Dexalot is trying to bring to the end user are, as I mentioned, transparency, the non-custodial relationship, and trustless state, or a trustless relationship, creating that element of trust. if we jump into the second part of the comparison, AMMs versus a club, right? Now, AMMs are fantastic. They really pushed DeFi forward, in my opinion. But in reality, the reason why they were invented is because the earlier generation blockchains simply couldn't support the throughput, the finality that a trading operation needs, right? And again, I'm not looking to bash a blockchain. I'm saying a generic blockchain with a finality, transaction finality time ranging from like 10 to 30 minutes is very difficult for people to risk manage throughout that time. Clubs that were tried on Ethereum previously, basically you would do a trade, that trade transaction going through could take a few minutes. And for that transaction to be truly safe, you need multiple confirmations, right? And during that entire time that you're waiting to settle, you're effectively riding market risk. The price can move, etc. And clubs simply didn't work. You had too many transactions that you needed to do. They were costly and they were slow. So AMMs came about, simplified the UX tremendously. Instead of a deposit, place an order, wait for a trade relationship, it became place an order and you're done. It basically reduced the experience to a single transaction and also eliminated the need for market makers, right? I'm extremely proud of that innovation. It's very cool and it's very innovative. But in reality, my view is that it was necessary to work around these problems that I mentioned. Now, third generation blockchains, which support quick execution capability, i.e. fast finality, high throughput, application-specific blockchains, which prevent any other transactions from happening on the blockchain so that you have a lot of bandwidth, is actually going to eliminate the need to work around protocol-level issues. And separately, of course, AMMs, to be able to provide a price under the covers, you need two assets that are linked together. And for those prices to be tight and the depth to be healthy, you need a lot of capital locked in an AMM. In clubs, the typical workflow is you have a market maker, and the market makers are pros that are literally just providing good prices and good depth to end users. And they have the ability to update their prices in line with the demand and supply in the market. So in that sense, clubs are more capital efficient. And the edge that we as Dexalot are chasing is work with professional market makers, create prices in DeFi that rival centralized exchanges and that beat AMMs. At a high level, this is how we're positioning ourselves. Just to answer the last part of your question, and I'm sorry, I got carried away. I'll shut up. I mean, these things I believe, so I end up talking a lot.
I understand. No, well, if that's the case, then Firestorm. So, can you give us a sense of, what is the status of Dexalot now? Then, so you're well out of testnet, deployed to an Avalanche subnet, as I understand it. Just give us a sense of what kind of volume you're seeing. You got users, traders placing trades, and then briefly just give us a sense of why Avalanche as well.
Sure, absolutely. So you are correct. Dexalot has launched in its application-specific subnet last Wednesday. So this is day 5. Or day 6, let's say, of being on a subnet. Originally, the application launched on Avalanche C chain, and the original thinking was that Avalanche C chain, given the novel consensus that Avalanche has, is fast enough and it will be able to support enough capacity for it to be effective for our end users and for it to be effective for market makers. However, as DeFi summer sort of progressed, Avalanche literally shot up in popularity. There were a lot of projects, and there were a lot of successful projects which ended up eating into the bandwidth of the generic C chain. What that meant for Dexalot is that the C chain fees increased, and as fees increase, it becomes a little bit more difficult to do high frequency market making on an exchange like ours. The fees sort of made it a little bit more difficult to use. And we sort of pivoted and we said, okay, we need to go to an application-specific subnet. Now, at this point, as I've said, as of 6 days ago, the subnet has launched. We are now in the process of adding listings. We've already listed AVAX against USDT, USDC. We have the Dexalot token a lot. And then we just listed BTCB, which is the native Bitcoin available in Avalanche, and then WETH on the exchange. The cool thing about Dexalot that, if anybody goes and looks at right now is that the prices are already good. Meaning the prices that you would get through an aggregator, particularly in the Avalanche ecosystem, often is worse than what you can get on Dexalot now. And this is 5 days into our subnet launch with our market maker just dipping their toes in the water. So volumes are definitely increasing versus our mainnet deployment, but obviously it's nowhere near where we would like it to be. But this is just the beginning of our marathon, if you will. We finally arrived at a point where the exchange can support a good number of orders per second. And then, we have only the first market maker that we worked with just turned on. A few others are in the works, and we're looking to expand volumes. Now, I think you asked about why Avalanche as well. In the end, it basically came down to transaction finality and scalability, right? If you can finalize transactions quickly, that naturally translates to less market risk to traders when they trade on a decentralized exchange. Second, having the ability to launch a subnet like the Dexalot subnet, make it completely application specific without compromising, decentralization or the transparency was key. Again, our goal was to create a unique capital efficient way to trade. And that's why we ended up with Avalanche. All the other blockchains that we evaluated either failed in the finality bit or scalability bit. Like the typical question I get is, why not an L2? The difficulty is L2s are still generic, right? If you go to an Arbitrum, for example, super popular, very successful, eventually when this ecosystem is adopted enough, you will still be competing in terms of bandwidth against other applications. We felt that the approach where we make it completely application specific and we give our users a isolated environment to be able to trade is probably a little bit of a better and safer approach for the future. And that's the reason why we went this way.
Cool. Just as we finish off this part of the podcast then, Firestorm, I'd be interested just in your perspective. You come from the traditional finance industry. You've worked at some of the big banks, JP Morgan, Bank of America, Merrill Lynch, I believe. So, how the big banks work. Well, I'm curious as to, you talked about pitching them on blockchain a few years ago, and banks have traditionally been a little bit skeptical, but also keen to run trials and so on. What do you see as the kind of the current state of thinking across, I suppose, if you can generalize a little bit, in the big banks to maybe the world of blockchain, but also, the world of kind of decentralized finance? How do they think about DeFi as a potential competitor or something that they can kind of put on, put a traditional banking on some DeFi rails?
Absolutely. Great question. And I have hopefully interesting answers here. So first and foremost, every single one of these banks, big and medium-sized, created teams or at least a small group of experts within the firm to first, and this was the original mandate, to evaluate how and when blockchain is going to disrupt business revenue streams that they have, right? That's the first look. The question that, upper management typically asks themselves is, okay, there's a new technology out there. We're doing our business a certain way. Does this technology pose a threat to any of our revenue streams, right? And I remember seeing an article where I think Goldman was hiring 100 plus people or blockchain and blockchain related initiatives that they're doing internally, right? That's number one. Number two, over the few years, the stance has been very simple. It's not because the banks don't want to get involved, but there are 2 or 3 reasons as to why they haven't been involved in a large way. They've definitely dabbled, but it's not big. The reason being is when there is no regulatory clarity, think about the scale of a JP Morgan, right? JP Morgan's businesses look at revenue and look at P&L on the order of billions of dollars, right? If you were to create a business where, the custody hasn't yet been solved, the institutional rails haven't been solved, even if you make $50 million as a, revenue source, the risk of getting fined on doing activity that's not approved by a regulator is much larger than 50 million. So the first thing that they actually need to be able to truly enter the space is clear regulation and a go-ahead from the regulators. And this is true globally, right? You see some of these countries where the regulation is a little bit warmer to the idea, and those are the places where the banks are getting into the business. Now, this is the more crypto angle and giving some sort of access to their clients, right? With that said, on the technology side or on the back office side of these banks, there is tremendous opportunity to utilize a distributed ledger or a blockchain to solve previously manual and very high overhead processes, right? Typically back office. One example that I've seen is that JP Morgan created something called JPM Coin, which is intended to settle and clear dollars or other currencies across the banking network for this JPM Coin, if you will. So there's been plenty of POCs run, right? Another one that I've seen, again, I go to JP Morgan because I'm quite close with the folks there. They've recently tried a tokenized asset lending platform in partnership with Aave on Polygon. And that's just JP Morgan. I know Citibank is doing a lot of investments into infrastructure plays within the crypto space and digital asset space, and every single one are basically waiting for the go-ahead, right? And the regulatory clarity is going to be a watershed moment where, the volumes that we're seeing in the market right now are very small and the volatility that we're seeing is very high, primarily because the traditional finance rails are just not there. And just to, mention that as well, in, for example, the FX markets, what happens is the institutional clients don't really do pre-funded trading. Like, you don't deploy billions of dollars to a single exchange to trade. You instead put up collateral with a bank who has a big balance sheet. They'll extend your credit, and using that credit, you access the market. The fact that the bank is integrated everywhere, the fact that the bank can increase or decrease credit very quickly allows these institutions not to worry about any of the underlying complexities. That really doesn't exist in crypto. Of course, there are credit facilities, but as we've seen in 2022, most of those credit facilities are not banks, and they mostly went under, right? Regulation will allow credit to be enabled for institutional clients. Then access will be enabled by the banks, and that's when we'll see these banks or other traditional finance services company enter the space.
Awesome. Feels like a nice place to pause then, Firestorm. Let's go to a very quick break, and then we will come back or finish off or have some fun. We will run you through the very famous crypto conversation hot take round. We will be back in one second.
In today's crypto market, the team at Brave New Coin are the sector's leading builders of custom crypto indices. BNC's powerful indexing engine draws on Brave New Coin's premium data to calculate high-frequency intraday and end-of-day indices for a wide range of index products. BNC's custom indices help you to gain exposure to the crypto assets class and track your performance against the market without having to become a stock picker. Not sure what you need? A Brave New Coin consultant can help you assess your requirements. Contact BNC today to find out more.
All right, we are back, and I'm with Firestorm, Head of Strategy at Dexalot, a decentralized central limit order book exchange, as we have learned today. It's been great having you on the show, Firestorm.
Thank you.
Very good to get your perspectives on everything from, central limit order book exchanges, both centralized and decentralized, and of course, how the big banks are thinking about blockchain. So fantastic. But you may or may not know, but I like to finish each podcast with a very quick round of rapid fire crypto conversation hot takes. Are you up for it?
Sure, absolutely. I'm always for hot takes. I'm often wrong, but why not? Let's share our opinions.
All right, I'm just going to run some questions at you, Firestorm. Just want kind of quick, rapid fire answers, hot take style. Question one for you, bit of a funny one, Firestorm, but where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I'm definitely not a maxi of anything. I do recognize Bitcoin as the absolute, maybe one of the biggest innovations in finance. But at this point, I'm one of those people who believe that utility is more valuable than just the concept of money, right? Bitcoin is a value transfer mechanism. I know there is some stuff to like build things on top, but in reality, it's old technology, right? Ethereum iterated significantly since Bitcoin, and then Gen 3 blockchains, you name it, Avalanche, Solana, etc., iterated even further. And I think the problems that digital assets and cryptos are trying to solve require better and more improved technology than Bitcoin. Therefore, I'm probably closer to a multi-chain state-of-the-world belief than a Bitcoin store of value. This is the only thing that matters view.
Got it. What would you say then is your firmest conviction crypto opinion?
Firmest conviction crypto opinion. So I think the next cycle will be driven by regulatory changes, and I believe this very strongly. And there's multiple reasons for it. Number one, this last cycle that we suffered throughout 2022 has been very painful, and it's been more painful than any other cycle where, there was a lot of money that got evaporated and mostly retail, right? I think at this point, it's impossible for regulators to stay on the sidelines, and they will have to create a proper framework and enable, like I said, traditional finance businesses to start making this, to allow this market to mature, if you will. And that's probably the firmest belief I have today, knowing what I know and having seen what I've seen in 2022.
I like it. Makes sense. Look, Firestorm, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So, with that in mind, if we cast our mind forward 10 years, whatever you like, Bitcoin, Ethereum, Web3, blockchains in general, what does it start to look like in 10 years' time?
Sure. So 10 years, especially in digital assets, as you obviously know, is eons, right? Like everybody knows this in crypto, time moves much, much faster. But if I think about 10 years down the line, I'm seeing a world where this market has matured, right? Volatility has significantly dampened. We're no longer observing these 500% up and then 95% down type movements. The only thing that's sort of spared there is Bitcoin and Ethereum right now, and everything else can go crazy in terms of volatility. The true institutions have been coming actually is realized in 10 years because we've been waiting for it since 2017. And we know for a fact that most institutions out there, whether it's an asset manager or a corporation, still don't have these assets as a asset on their balance sheets. And I think payments business is going to be really trading, and payments is really going to be disrupted, right? The Visas of the world, the MasterCards of the world are doing a lot of POCs with, again, Generation 3 blockchains. And I think we're going to come to a point where the market is maybe 10 to 15 times larger than it is today. Maybe I'm underestimating even. But more importantly, it will have entered our daily lives where, maybe I'm still swiping a credit card at a grocery store, but under the covers, instead of a centralized Visa network, it's actually a blockchain-based settlement solution that I pay with. So that's kind of how I look at these assets and the 10 years down the line.
Wonderfully said again, Firestorm. Let's kind of flip that concept then. So instead of looking ahead, you'll be familiar with a famous quote by William Gibson, who said that the future is already here. It's just not evenly distributed. So with that in mind, can you think of an example of the future being here right now, but most people aren't aware of it?
Absolutely. I mean, for friends and family who look at me like a crazy guy when I tell them about digital assets, I usually use a single example about how it changed my life, right? Or at least, let's not go crazy, it didn't change my life, but at least it can if I ever need to do that. So think about buying a house, right? How does that work in the US today? You go to a bank, you say you like a house, then they'll give you a pre-approval, then you'll take the pre-approval, you'll do an offer, and then you have anywhere from 30 to 90-day process where they'll, put you through a lot of hoops to decide if you're creditworthy, right? It includes a history search, it includes a credit check, it includes a lot of things. One thing that I found, and one thing that I thought was extremely compelling in the world of loans, it's not exactly a mortgage, it's more a collateralized loan, but it is the algorithmic loan concept, right? Algorithmic loans effectively took out the middleman. And if you actually have a set of assets, you can put them up as collateral. And especially again on a third generation blockchain like Avalanche, you can press two buttons and boom, you have a big loan that's available to you. Yes, it's a percentage of your collateral, but nevertheless, it's available to you within seconds. I think that's a mind-blowing concept. For example, in 2022, 2021, the housing market has been incredibly hot. You would go out and look at a house and the house would be sold within 24 hours. And loans no longer worked because people didn't want to deal with people financing, and algorithmic loans was a solution to this. And whenever I show people that, hey, look, you put $100 in this algorithmic loan protocol, you are able to pull out $70 worth of a loan, I think it's a game changer. People don't really know that it exists. The volatility of the crypto assets make it difficult to use as well. I recognize that. But still, the underlying functionality is already here, and it allows a person who's managing a business and knows how to manage collateral, knows how to manage risk. It gives you a brand new source of capital and brand new source of financing. And I think it's extremely underutilized, like the Banky protocol on Avalanche or Compound on Ethereum. Like these are literally life-changing solutions that people simply don't know. These need to be adopted more.
Got it. Thank you again. Let's start to finish off, Firestorm. Time to get weird just for a second. If we zoom out, what do you see as the long-term future for the human race? Do you see dystopia or utopia?
It's a funny question. Me and my friends, as weird as I am, we've discussed this a few times. There's two takes, but my view is, I think we're going to come to the brink of, I don't know if I would call it dystopia, but brink of, various degrees of catastrophical events. But as the human race, we've survived many of those in the past, right? I actually think ability to transfer value from point A to point B becoming a lot more efficient is going to make our lives better overall. And then, maybe not necessarily associated with digital assets, but at this point we've come to a level of technological advancement that we're going to be able to explore, the moon, the Mars. There's a lot of headlines around this, and new energy sources, right? US just released information about how they were able to pull out more energy than they put into a new nuclear process. I think those are things that will drive us towards a better future, although I think the road there will be bumpy, because what that also means is the entrenched businesses, the entrenched industries like oil, like, financial services, they're going to be shaken up pretty hard. And if anything, we as humans don't like change quickly. But I'm still an optimist. I think, good things are coming, especially as we further advance in, technologies such as digital assets, right? So that's kind of my view.
Totally. I like it. All right. Let's close this down. Firestorm, finally, what is your favorite science fiction book, film, or TV show?
Oof. I have so many, man. What I was doing was I would do two. I use audiobooks a lot. When I was commuting heavily, I would read at least 2 science fiction books, followed by 1 nonfiction book to balance, so that I wasn't, a pure sci-fi guy. But the one book or series, I should say, that I really loved was called Old Man's War. And I want to say Joshua Dalzell, but 1 second. Old Man's War. I'm going to look it up very quickly.
Sure.
John Scalzi. John Scalzi. I'm sorry. Yes. And it's a fantastic book because, if you're like me, finding good science fiction movies nowadays is extremely difficult. All the storylines have been exploited, I feel. And this book and this series was actually about a story that was very different than what I've seen before. This is one, if there is a consolation prize, that's going to go to the Black Fleet trilogy, where, actually, I'm not going to give any spoilers, but Black Fleet trilogy I'll tell you right now also. Again, it's about the future that's Joshua Dalzell. There you go. That's where I remember the author.
Awesome. Thank you.
Those are the 2. Yeah.
Got it. Thank you for sharing those recommendations. Hey, look, thank you for coming on the show, Firestorm. Really enjoyed hearing your perspectives. Close it out by just telling people where they can go to find you on Twitter, and of course, where they can go to learn all about Dexalot.
Absolutely. So let's start with Dexalot. It's simply Dexalot.com, which brings you to the landing page of the project where you can find information. If you want to dig into the documentation, look at code, look at APIs, then it is docs.dexalot.com. And if you really just want to dive into the exchange, it will be app.dexalot.com. I like to give all 3 because we typically hit 3 different audiences on 3 different landing pages, if you will. But regarding me, you can definitely find me on Twitter. It's going to be twitter.com/Firestorm, but instead of a letter M, I do L as in Larry, V as in Victor, and L as in Larry. The full word Firestorm was taken, so I did creative characters for my letter M. That's how you find me.
Awesome. Links, of course, will be in the show notes. Thanks, everyone. Thanks for coming on the show. Firestorm, all the best, and bye for now.
Thank you for having me.
All right, there you go. That was Firestorm from Dexalot. Always good when you can just sit back and relax as a host and let the guest, explain their unique viewpoint on whatever it is they're an expert in this case, decentralized central limit order book exchanges. So I hope you learned a little something today, folks. Thank you very much for listening. Please remember to subscribe to the Crypto Conversation so you know when each new episode drops. But that is today's show. Thanks, team. This was the Crypto Conversation for Brave New Coin.